Crowdstrike is an incredibly fast-growing company that is taking over the cloud security space. Whether it be stopping data breaches or tracking down hacks by other countries, Crowdstrike can handle it. And their stock price has reflected that, tripling in value over the past 2 years to a current valuation of over $46 billion. And now with their latest earnings announcement, we can see that they're growing their revenue 70% year over year. At that rate, they will double the amount that the company is bringing in every 2 years, potentially giving them huge upside. At the same time, some think the stock is currently overvalued and that its current price already factors in a huge amount of future growth. And that's evidenced by the fact that the stock price has been fluctuating up and down for several months despite these impressive earnings. Hey everyone, and welcome to FinTech. And in this video, I'm going to be going over the background of Crowdstrike as a company, looking at their most recent earnings report, and looking at what those numbers can tell us about how the company is performing right now as well as in the future. Lastly, stick around until the end of the video to see whether or not I personally decide to invest in Crowdstrike. So hit the like button and subscribe if you want, and let's dive right into it. Crowdstrike was founded in 2011 by current CEO George Kurtz, along with two co-founders, Dmitry Alperovich and Greg Marston. They launched their first product, Crowdstrike Falcon, in 2013 with a focus on security threat intelligence. Today, Crowdstrike Falcon allows companies to monitor their endpoints in a cloud-native way that is bolstered by AI. An endpoint is essentially any place where one computer system needs to connect to another. It could be an API, it could be a network point. It's basically a weak point that attackers are going to try to attack, so it's an easy area to try to protect. By protecting these endpoints, security companies can make sure that no outside threats can get into an internal network. And then Crowdstrike takes this one step further with their zero trust architecture, which means that even individual applications within a company still have to pass security checks before they can communicate with each other. Falcon Platform now offers a full security suite that is all packaged up in a cloud-native way, allowing it to scale to pretty much any workload. And it uses Crowdstrike's extremely advanced threat graph to power their detection capabilities. We'll talk about the rest of that suite of products a little bit more later in the video. But their Falcon platform recently received the highest possible score from Forrester in a review of their external threat intelligence tools. And just 1 year after launching Falcon in May of 2014, Crowdstrike helped the US Department of Justice charge 5 military hackers with corporate espionage against the United States. Later in 2015, they also helped uncover evidence that implicated North Korea in the hack of Sony Pictures, something that further boosted their public profile. They continued to gain both notoriety and increased funding, and by 2017, they reached a valuation of over $1 billion. All this time, they continued to improve their products, grow their product offering, and they were still a private company. But that changed in 2019 when Crowdstrike first IPO'd at a price of $34 a share. By the following Wednesday, their valuation had nearly doubled to a price of $67 a share, giving them a valuation of $10 billion. The stock has never been cheap, as the market has always priced in their consistent high growth and made you pay a premium to be an investor. Despite the high price, I actually started investing in this company back in 2020, before the SolarWinds breach, which actually further propelled their public profile. The SolarWinds breach, nicknamed Sunburst, was one of the largest software hacks of all time. The breach involved a company called SolarWinds, which offered network monitoring software that was used by large corporations and organizations across the world. In the US specifically, companies like Microsoft and Intel were infected, as well as the United States Department of Defense and the Pentagon. Even other security companies were impacted, including FireEye, who actually ended up discovering the breach. After Crowdstrike heard about the SolarWinds attack, they quickly checked to see if any of their systems were affected. But wouldn't you know it, Crowdstrike themselves were not affected, and none of the customers that they were protecting were affected either. Because of this, after the breach, SolarWinds themselves actually signed on for the Falcon endpoint protection that Crowdstrike offered. This really illustrates Crowdstrike's competitive advantage. They make the best security products in the world. Falcon endpoint protection was obviously one early service, but it's not the only product that Crowdstrike offers. While they do offer best-in-class endpoint protection, they also offer services such as threat intel with their Falcon X product, security and IT operations products, and cloud security, identity protection, and more. And they offer all of these products as a cloud service, meaning that if a customer likes one of their products, it's easy for them to pick and choose additional products that they want to add on to their subscription. This means that as customers gain more and more value from Crowdstrike, they can continue to spend more money on the platform to try to gain even more value. This makes the barriers to entry really low, both for new customers looking to sign on, as well as for existing customers looking to expand their presence on CrowdStrike's platform. And the fact that CrowdStrike is cloud native is also key to their success. Most modern companies are run in the cloud, meaning their applications, their storage, and their computing power is mostly outsourced to a separate company that runs a public data center like AWS, GCP, or Microsoft. The organizations that are building their companies on the cloud need the same benefits from their security product that they get from moving to the cloud, namely near infinite scalability and extremely low barriers to entry. CrowdStrike in particular has an advantage over other security companies in that it was built from the ground up as a cloud company. Being a cloud native company gives CrowdStrike a huge fundamental advantage over other securities that moved into the cloud over time, namely the fact that they were brought up on this technology and they've designed their business around that technology versus an older security company trying to bolt on cloud technologies after the fact. For example, Threat Intelligent Graph is CrowdStrike's real-time threat detection engine, which uses the power of both AI and cloud analytics to make real-time analyses of threats all over the world and gather that all information into one place. Because they run on the cloud, they can continually add information to their threat graph, and it can get smarter and smarter over time to a nearly infinite degree because it scales automatically. They currently analyze over 6 trillion signals using this technology per week. And despite the huge computational power and complexity involved in Threat Graph, CrowdStrike can simply deploy a small, lightweight agent to their customers' clouds. This is different from other solutions which basically compare internet traffic to a database of potential threats and sees if somebody else has been impacted by this malware in the past. What threat detection does is it looks for patterns, so companies can actually identify threats before they've affected anybody. This is extremely clear in zero-day exploits like we saw in the SolarWinds hack, because nobody had ever seen that type of attack before, and yet CrowdStrike was able to prevent it anyway. In a world where anybody can make a computer virus in a matter of minutes, that kind of intelligence isn't just a perk, it's a necessity. So okay, CrowdStrike is the king of zero trust, AI-powered, automated security that runs natively on the cloud. But without numbers to back that up, that's really just a string of buzzwords that doesn't really mean anything to most people. So let's now look at the company's earnings for Q1 2022 to see how they're actually performing as a company. CrowdStrike reported revenues of $302.8 million, up 70% year over year. Also, because much of their revenue is recurring, we can also just look at what percentage of their revenue was newly signed on this quarter. That puts their annual recurring revenue, or ARR, at $1.97 billion, an increase of 74% year over year. They also maintained a high dollar-based net expansion rate of over 120%. This means that for every dollar one of their customers spends this year, CrowdStrike can expect them to spend $1.20 next year. This is an indication that customers really like the product, and once they get a taste, they want to use more of them. Now, this meets their long-term benchmark of at least a 120% dollar-based net expansion rate, but it's also a sequential decrease over the last 3 quarters. They also increased the percentage of their customers paying for 4 or more modules on their platform to 64%. Up from 55% in 2020. For the first time, they also hit 50% of their customers using 5 or more modules. This means that half of their customers at this point are paying for 5 modules from CrowdStrike, again showing that once they try one of the modules, they're more likely to expand to more. They also showed that 27% of their customers were now using 6 or more modules. So in terms of expanding sales to their existing customers, they seem to be on the right track. Now, if you've watched my previous videos, you'll know that some of the numbers that companies report can be a little bit misleading, especially when they're reported on a yearly basis. For example, if a company shows that they grew a huge amount year over year, we don't know if all that growth occurred 9 months ago or if it occurred 2 weeks ago. Now, I'm not saying that that's happening here, but one way we can avoid any kind of confusion is by looking at their quarter over quarter growth rate to see how much they've grown in just the last 3 months. So in Q1 2022, they grew their revenue 14% quarter over quarter. Now, if they were to grow at this same growth rate for 3 more quarters, that would annualize to a growth rate of around 68.8% year over year. A slight slowdown from what they reported this quarter. But if we look back at their historical Q1 performance versus the other quarters they have in a fiscal year, they have traditionally underperformed in terms of their ARR in Q1, declining on average 12% from the previous quarter. However, this most recent quarter, rather than their ARR decreasing 12% due to seasonality, it only dropped 2%. So compared to the usual performance they would have seen in Q1, they absolutely blew it out of the the water. Leadership addressed this lack of the usual seasonality during the conference call. They said that, "I think it's a continuation of trends that we have been seeing for quite some time. George talked about them, the digital and security transformation, cloud adoption, this robust threat landscape, and I think we're in a buying environment." So CrowdStrike experienced an exceptional Q1, not because of any one-time event, but because there was simply more demand out there to be met. Now, some of that demand may be from all the companies that moved to the cloud back in 2020, and they're just lagging a little bit in terms of getting a security offering to match their cloud offerings. And if that's the case, we may not see the same kind of growth in the future. But given CrowdStrike's abilities to expand their sales to existing customers once they've landed them, I'm still pretty optimistic about CrowdStrike's future ability to grow. So the other thing we need to look at is CrowdStrike's guidance for next quarter and how they think they're going to perform over the entire fiscal year. So for Q2 2022, which runs from the beginning of May through the end of July, CrowdStrike is guiding for revenue between $318.3 million and $324.4 million, which would represent a quarter-over-quarter growth rate of 7.12%. This would obviously be a massive slowdown from the 14% growth that they've seen their last 2 quarters. Luckily for us, CrowdStrike always beats their earnings. Over the past 8 quarters, they have beaten their guidance by between around 4% and 9% every single quarter. So if we're conservative over this next quarter, and let's say that they beat by 4%, that would give them a quarter-over-quarter growth rate of 7 plus 4%, or 11%, which pretty much puts them in line with how they've been growing in the past. Similarly, they put their yearly growth rate for the entire fiscal year at 62%, which I again think is conservative. If they beat at all similarly to how they have in past years, they'll probably have a growth rate much closer to the 70% growth that they're reporting today. So the company is growing quickly, check. The company is growing consistently, check. The company is increasing its gross margins up to 77% from 72% back in 2020, meaning that they're converting more of that revenue into earnings. So if they kept growing like this forever, the stock price would obviously rise dramatically. But the stock price has been relatively flat over the last several months, pretty much dipping and then rising and then dipping again, despite the fact that CrowdStrike has had pretty consistent performance over that time period. So the real question is, how long can CrowdStrike sustain its growth, and can it sustain it long enough to overcome its valuation? Well, thanks for asking. CrowdStrike mentioned on the call that only 1.1% of cloud spending is currently spent on security products, and that number could drop below 1% as soon as 2023. At the same time, Frank Dickerson of the IDC, which stands for the International Data Corporation that does market research, says that security spending should be between 5% and 10% of an organization's IT budget. This leads CrowdStrike to estimate the total addressable market for their current cloud security offerings at $12.4 billion by 2023. And that's not counting other markets that CrowdStrike also serves. They put their total addressable market across all the different services they currently provide at $36 billion. And they expect that to increase to $44 billion by 2023. But when you add in continued growth, their current product roadmap, future initiatives, and their cloud security opportunity, that could grow as high as $106 billion by 2025. So even if CrowdStrike doesn't capture any larger percentage of the total market, they stand to quadruple in size over the next 4 years. And I'm willing to bet that CrowdStrike is going to do a little better than keep their current market share. They're going to continue winning customers over from their competitors. Even just looking at their current customers' growth, they now have 11,420 customers, including 214 of the Fortune 500. That increases their total customer count 84% year over year. Simply upselling their existing modules to these customers is in itself a huge opportunity, and we've seen that customers tend to buy more than one module from CrowdStrike. But in addition to this opportunity, CrowdStrike also has the ability to launch new products to these customers, as is evidenced by the CrowdStrike store and the customer APIs and endpoints that they are offering for expanding their platform as a service. So there is absolutely the potential for CrowdStrike to continue growing at its current pace. And while the market clearly has a lot of growth already priced in for the company, if the company keeps growing like this, eventually the stock price is going to have to go up. The real risk here is if that future growth doesn't materialize. That being said, my current CrowdStrike position is currently 50% larger from my next largest position. And so even though I'm still really confident in the company, I didn't add any more money after their earnings report. Now there's always the potential that I will add more to my CrowdStrike position in the future or even sell some, so you should never try to copy my trades. But let me know what you've done with CrowdStrike. Also, if you like free money, you can get $30 from M1 Finance when you sign up for their trading platform and deposit $100. Even if you end up not liking the app, you can always pull your money along with the bonus back out, so it's a no-brainer if you haven't already taken advantage of that. Don't forget to like and subscribe if you enjoyed the video, and I'll see you next time.